Welcome to this edition of Tiger Trade Weekly for Wednesday the 27th of March. My name is Greg Boland of Tiger Brokers, and each week we dwell on what has happened in the US share market and what may be the drivers in the week ahead. Last Thursday, the 21st of March US time, San Francisco-based entertainment, social networking and news website Reddit listed on the New York Stock Exchange with the code RDDT. This is in what is known as an IPO, or initial public offering. The established price for the IPO was $34 and yet on the listing day it debuted at a massive $47. On the day it hit a low of $45.05, and that has been the low so far in the trading. Today it reached a high of $74.80 before being sold off into the close and finished today's session just above $65, up 9.1% for the day. The market was probably hesitant going into the launch of this IPO because the other social media giant, Facebook, when it launched in 2012, the share price dropped from $42 to a low of $17.55 in the first 6 weeks of trading. Of course, Facebook has changed to be now known as Meta and has traded as high as $523 in the last month as the AI craze continues. Options of Reddit have been well sought after as people buy calls to go long the stock via the derivative market. Also, in related social media news, Trump Media and Technology Group traded for the first time on NASDAQ today and closed up 16.1%. Turning to the broader market, the S&P 500 closed down for the third day in a row at 52.03. The index hit a high of 52.61 after the Fed Reserve held rates steady last Thursday morning New Zealand time. They also signalled that there will be 3 rate cuts this year. So far in 2024, the S&P 500 has hit a record high 20 times, which is unheard of in previous years. Often the week after the Fed meeting, after their 6 weekly meeting, the market has a bit of a pause and a breather, and definitely that's the case this week, as signalled by the 3 down days so far this week. The market has a shortened week because of Easter and therefore closes on Friday morning New Zealand time. Given that the market has rallied so far in this first quarter, traders are probably positioning themselves ahead of a month end before the Easter break, and so trading will be quite mooted going into this Friday. Also, if we think of other central banks around the world, the Bank of England kept their rates steady, while the central bank in Japan, known as the Bank of Japan, hiked rates for the first time in 17 years. So people looking at Japanese equity ETFs has definitely increased over the last period, and that's the same with Tiger Trade clients. Meanwhile, the Central Bank of Switzerland, known as the Swiss National Bank, has cut rates and is the first major central bank to do so. It'll be interesting to see how many others follow suit during the course of 2024. So the Dow and the NASDAQ traded up almost 2% during an early part of today's session and then sold off on economic news, and also Nvidia being sold off after around 3 o'clock New Zealand time. The S&P closed down 0.28% for the day, whereas the Dow Jones closed more or less flat, while the NASDAQ fell nearly 0.5%. So what's driving this? And if we look at what's happened in the last couple of years, the main driver has been the Magnificent Seven. So if we look at the returns or the performance of the Magnificent Seven this year, they are here highlighted by their capitalisation. Microsoft's the biggest by capitalisation, and in 2023 it rose 58%. And year to date it has risen another 12%. So overall for the 2 years, well over 70% return. Meanwhile, Apple is up 49% last year, but is actually down this year by 12%. Definitely on soft iPhone sales, particularly in China. Nvidia, the darling stock this year of the Magnificent Seven, is up 87% this year, following being up 239% last year. In the other stocks, Alphabet and Amazon have outperformed some of the others. Alphabet up 8%, Amazon up 17% this year to date. Meta has been one of the surprises. Last year was up 194% and up an additional 40% this year, mainly again on AI news, and it's in second place of the Magnificent Seven to Nvidia. Tesla, long the darling stock, particularly from 2020 to 2023, and in 2023 it was up over 100%. This year to date is actually down 29% as sales dwindle. When we look at these 7 stocks, why is it so important? Well, one of the parts of it is that 7 stocks represent over 30% of the S&P 500's total market capitalisation. So around 30% of the 45 trillion, skewing the results of a market weighted S&P 500 significantly. If we look back to 2022, the median return of the other 493 S&P components, not including the Magnificent Seven, was 13%, whereas the Magnificent Seven's average return in 2022 was 154%. This brought the overall return for the S&P 500 to be 35% when we combine the 13 and the 154 together. So thanks for joining us, and we look forward to seeing you again after the Easter break.